Now, if you were paying attention to the ETF world this week, you will have noticed the big story unfolding with one Cathie Wood. Indeed, the at times controversial ARK Invest chief executive has made a move into Europe with the purchase of Rize ETF. Wood says the move answers her customers' biggest question: how can they access ARK in Europe? But it's fair to say we have some questions of our own. So joining me on the line is Kenneth Lamont, Morningstar's senior analyst for passive strategies. Kenneth, welcome. Can you just start off by explaining what ARK actually is?
Well, so ARK is an US-based asset manager which specializes in actively managed thematic ETFs. That's sort of the bare bones of it. They sort of specialize in sort of highly concentrated, high growth portfolios targeting one or more technologies usually.
Great. So in the context of perhaps some of ARK's more controversial investment calls and indeed the tech backdrop, is this a deal that you think we can be legitimately excited about, Kenneth?
Well, I can say there will be investors out there watching this video who will be excited. Morningstar, we perhaps are slightly less excited for reasons that we might touch on in a moment. But it really is them buying themselves a toehold into the European market.
Okay. And what are Morningstar's specific concerns? And I refer specifically there to ARK's Innovation ETF.
So my colleagues in the US have been have held a negative view of particularly the flagship Innovation ETF for some time, but every single one of ARK's actively managed strategies in the US receives a negative or a neutral rating, a medalist rating, and this is driven by our view of the parent and of the people, both of which get below average scores, and this is for multiple reasons. One of the main reasons is the lack of risk management or appropriate risk management infrastructure within the company. But also other things like a lack of succession planning for if and when Cathie Wood can no longer be the sort of the lead portfolio manager. But it stretches to more than that. These are highly risky strategies, which really don't take into account best practice even amongst their immediate peers.
So there's obviously a little bit of kind of, shall we say, analytical politics about ARK and Cathie Wood, but to the nuts and bolts of it and what investors will actually care about, what does ARK's performance actually look like? How have they done?
Well, if we take the flagship Innovation ETF, which at one point was the largest thematic fund in the world, with more than 25 billion US dollars in assets. Just as you say, the bare bolts of it are, if you'd invested on day one when it was launched back in 2014, the performance is more or less matched its category benchmark. So the Russell mid cap growth index, but this really doesn't tell the full story. For a start, the Innovation ETF has had much higher volatility than its category benchmark. But even more than that, this doesn't tell the story of the average investor in the fund. So my colleagues in the US did some research earlier this year and showed that even though the total return over that period was similar, was actually positive if you bought in on day one and held it till earlier this year, you would have had a positive return. But that isn't the case. Most money piled in towards the top end of the tail end of the strong performance period they had, and was really invested for the big fall that came after that. So actually, the average dollar invested in the fund was almost minus 30%, which gives you a real indication of how the average investor has fared in the fund, which is strikingly different.
Sure. Okay. And just finally, it would be remiss of me not to mention Martin Gilbert. So the purchase of Rize brings Wood into business with Martin Gilbert of Asset Co. He's a veteran of fund management. He previously owned Rize ETF, and Asset Co will now have active equity ETFs on Rize's platform. So given everything that's kind of been said and written about ARK, doesn't that strike you as a little bit of an unusual partnership, to say the least?
Unusual, yes. They're both very media savvy operators within the fund management industry. But in some senses, no. The both have vested interests, or they have interests in entering the European ETF market, and both have talked about it in the past. So, in that sense, it makes sense, but it remains to be seen how these two um, well-known characters within the finance industry operate under the same roof.
Okay, much to keep an eye on. Kenneth, thank you very much indeed. For more on ETFs and passive research, check out any of Morningstar's international websites. Until next time, my thanks to Kenneth. I've been Ollie Smith for Morningstar.